Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the stock market wrap up for part one. Part two and part three. Part two, we're going to go over our long, short, sells, covers, and part three, we'll go over some of the stocks that we're watching that showed up in the scans today. First off, I want to show you the NASDAQ closed up 0.11%. The best news about today's session was that I'm going to show you the S&P 500 also. I want you to look at the price action in the top pane window. You can see how it almost closed near the high there. NYSE, same way. Dow Jones Industrial Average, going to pull up here. Let me show you that right there. And you see, and then the S&P 600. As you can see, okay, what I want to just really show you, though, is that these stocks came well off their... Let's see, this is Finviz I'm using right here. Look at the close, the last 15-minute bar in the Dow. Wow. Last 15-minute bar in the S&P 500. Wow. And look at it over here in the NASDAQ. Pretty darn impressive. Taking it off the lows. That was extremely, extremely, extremely impressive, and that just tells me that the market definitely is being accumulated by investors. Even though volume was lower today on the NYSE, S&P 500, and on the NASDAQ, the point is that in the last hour of the day, in my opinion, they did come in trying to accumulate stocks. One certain uptrend you could be watching right now for stocks to hold on to is this one on the NASDAQ. So we look right there. It kind of it touches this bottom in March, this bottom here in early April, and then right here in April. If the stock market stays above that, very, very trend line on the short term traders want to remain long. I'm a little bit more long term, and my idea is a pullback to the 50-day moving average on lower volume is okay. Nothing's wrong with it. Look at this weekly chart on the NASDAQ. That's very, very bullish. Look at the relative strength line. Look at how bullish the relative strength line is in the NASDAQ. So this is a very bullish chart, and to me, we need a little pullback. However, I want it to be on lower volume, like basically early 2009 was. That would be really, really nice. And then I'll show you the S&P 500 on the weekly. As you can see here, not as bullish, but still very bullish. Lower volume pullback wouldn't be bad. I guess you could say if we wanted to really, we could connect these lines right here kind of through everything. It connects the support of the 2008 lows along the way, cuts through the breakdown area, and then shows how the trend line is really close to the 200-day moving average, and on the weekly I was showing you it's like close to that 50 weekly average. But still, so not only is the 200-day moving average going to probably prove as some resistance area, that white line is resistance line, was support, became resistance, but it was in a downtrend anyway, so it'll be probably pretty heavy. We'll probably try to stop the S&P 500. Looking on the NASDAQ, we can do the same thing with the trend line connecting through there. As you can see where the breakdown point is, it's not as vicious as a downtrend. However, not only will the 200-day moving average probably come into play as short-term resistance, but as it gets up to this downtrend line of where the recent support, which is now resistance levels are, we'll see how it reacts. However, the charts are looking great, and whenever you have stocks coming off the lows like this CanSlim stock, quality stock, and this stock that's CanSlim quality, trust me, you've got a market that's pretty good, including this one that's coming off of its lows, GMXR, which is CanSlim quality. So if CanSlim quality stocks look like that, and your market looks like this, with the relative strength line looking pretty strong, trust me, there's no reason to be that bearish, especially whenever on the Investors Intelligence survey, I do believe it is 27.3% are bearish and 26% are bullish. On the AAII survey, there are more bears than bulls. I do not have the numbers in front of me, so I do not want to make up any numbers. And also, the Street.com poll shows more bears than bulls. I don't have the numbers in front of me, so once again, I don't want to give you the numbers. I just know that there were no more bears than bulls. That's 3 surveys. The only one that I haven't looked at is the market vein number. But even if that's not 3 out of 4, and maybe possibly 4 out of 4, that's pretty convincing. The crowd's very bearish out there, and they really, really think that we're going to fail here, and I guess it's because the NASDAQ's at the 200-day moving average. And listen, it might take a while to get above that 200-day moving average, but as long as we're rallying on above average volume and selling off on below average volume, and like I said, we have stocks looking like this off the lows, there's no way I'm going to turn that bearish, especially then also when you have the S&P 600 coming along with it since March. Look at it off the March lows. S&P 600 is up 43%. That's extremely impressive. And then not only that, recently the IBD indexes have began starting to take a lead, as here's an IBD index chart weekly, and as you can see, it was up over 2% on the week on higher volume, starting to finally move higher. The IBD 100 finally shows a little tick higher, showing a little bit of a relative strength outperformance on the short term. So if that starts to happen with S&P 600 and the NASDAQ acting like it is, along with the very, very bullish Chinese stock market, this is the Shanghai SC Composite, and then Market Speculator has posted the Shenzhen Index, and as you can see off the November lows, it's up 44% right now. So a lot of these indexes are looking bullish, and that's gonna be bullish short term, I still think, for stocks as long as the crowd stays bearish. Also, let's look at some important metals. Let's look at silver. Silver is put in a pretty bullish reversal at the 200-day moving average. Still, the moving averages are drifting lower, so the price trend should be lower. I can connect these lines right here and say that this trend line, let me go to there we go, arithmetic shows it a little bit more clear. That'll act as support, and then also you can do this, and it's not good, this chart pattern. This is called a descending base pattern, and that's a bearish wedge also. This one wasn't good either, this wedge here. I guess we could say it's a wedge. It wasn't, but like some will say that was a wedge and it broke down from a wedge, but whatever. It wasn't really a rising wedge as much as this looks like a cup with handle. Cup with handles forming here. No, guys, cup with handles do not come from downtrends. Those investors that call it cup with handles are not getting it right. Bottom line, Investors Business Daily wrote the rules on cup with handles, and to be a cup with handle, that must come from a previous 20% uptrend. Speaking of that, you could also connect these lines right here and say that silver is still above its long-term uptrend support, even though it is in a short-term downtrend. Like I said, I'm sorry that I don't draw trend lines a lot, but I am now, and as you can see, I get these trend lines all over the place. So long term it's okay, short term not so much. Let's look at platinum. Platinum, same scenario. Short term, the downtrend is alive and well, and then also if we go to the weekly, you can see that the super downtrend is alive and well, connecting those areas, and then even doing this, connecting this to this. So you got a lot of downtrend lines that you're dealing with that platinum's got to deal with now, but at the same time, you could say that this is the long-term trend line for platinum, and it only got ahead of itself, or intermediate-term trend line for platinum, and then it only got ahead of itself recently by undercutting this trend line's lows. Like I said, you can draw trend lines all day long, and you see that trend line's right above the 200-day moving average, and once it cut that low, you can see it started to move down, and it broke down. You know, and now if it holds the support there, bounces, you could go along. So I got all these lines all over the place for you. However, long term, I'm just going to get rid of all these lines now. I'm going to say that platinum is in a precarious situation now with it being below the 250-day moving average. If it can't get back above it, I assume that we're going to have a death cross to the downside by the 50-day moving average below the 200-day moving average, and that just can't be good. However, if we do hold the lows here, we can even go sideways. Look, I learned how to do this finally. I'd like to thank Tellurant, or Scott, for showing me that it's much easier to do this. I can't believe I forgot actually how to do that, but it's true. If you can use these lines as support right here, use this base right here, area as support. You could use this area right here as support. So as you can see, platinum's got a lot of support areas still before it even gets to that downtrend line that I showed you that it was going through right here. Like I said, I can draw lines all day, baby. I'm a line drawing machine, so it's whatever you want to draw. So just getting a little bit more helpful hints. Gold. Gold is the most bullish of them all as it still holds the 200-day moving average. It's still above its long-term or intermediate term uptrend line, holding on to it. Look at that perfectly. Still on a little sub-intermediate term. Downtrend line is in effect. Very, very long term. You can say that connecting these lows right here, you only had a fake out right there in October, November, December, and then it got back above it, as you can see, and now it's holding on to it. So gold overall is pretty bullish compared to all the other metal patterns. Anyway, I'm going to go ahead and finish it off with the United States dollar index. We're almost out of time. United States dollar, what I can see here just right off the bat pretty easily for me is this. That's there, and then so it's in a big flag pattern for me. So it's how it resolves itself out of this coming up that'll really make a difference to me. If it resolves itself above the 50-day moving average and that downtrend line, very bullish. If it resolves itself to the bottom of the symmetrical flag pattern that it's building, pennant, whatever, flag. It's not a pennant. It's just a flag formation. Then, actually, that doesn't look good. It looks like it's already trying to break down, doesn't it? We'll see how it resolves itself. If it breaks down, that won't be good. Anyway, I'm going to go and wrap it up there. Part 2 and Part 3 will follow. I hope you're all having a wonderful, wonderful weekend. Aloha.